Welcome back to the channel, guys. I'm your host, Buckning, and today we're just gonna do a little real talk, fireside chat. Go through the portfolio, just talk about a few things when it comes to investing, when it comes to trying to figure out what we do in times like this. Because I'm sure a lot of people are feeling it. I know I'm really feeling it. I've probably been feeling it for the past week here in a bit. But before we do get into that, if you're new to the channel, welcome. This is where we put $100 a week into a tax-free savings account to build a dividend portfolio right in front of your eyes. And if you're not new, welcome back. So yeah, we'll talk about a few things, but of course we'll go through the portfolio here real quickly. So the portfolio today closed out at $11,185.26. We are up $73.21, up 0.66% for the 1 week. We are down $59.97, down 0.53%. For the 1 month, we are down $32.21, down 0.29%. For the 3 months, we are up $362.63, up 3.35%. For the 1 year, we're up $1,622.07, up 16.96%. And for the all, we are up $2,195.10, up 24.42%. And that is the portfolio. We have $179 in cash and $100 that's currently not available. That will be in there eventually. Okay. So this this is the portfolio at the beginning of the week here. But I want to talk about a couple things. Because I'm really feeling it. I'm really feeling the drop in certain positions that I have that are not in this portfolio specifically, but in my other portfolio. I'm down, like, not as a whole portfolio, but some positions are actually down like over 50%. I think the highest is like 64%, but that's a really relatively small position. And I was looking at it today and I'm just like, dang, it is rough out there. And it's tough because it's like, I truly believe in the companies, but I think they're really reflecting how the market is, or even investors are taking this whole inflation that's happening, all this stuff that's happening around the world. And it's just not fun. We're heading downwards in the market, and it just continues to happen. We have one day of hope where it's up, $1,000 or whatever it may be in a position, and then it's down the next day, same amount, right? And I'm sure there's a lot of people feeling that, whether it's down $100 for somebody and then up 150 the next day, but then down 200 the next day. It feels the same. It's all relative in the bigger scope of things. I just want to talk about the people who are down 50% or more, but you really truly believe in that company. I give you respect for that, because it really, at this point, I think a lot of investors start to question their stock picks or their company picks. And the reason they might do that is because when you lose 50% in a position, you don't gain back all your capital or all your value by it going up 50%. You gain that by it going up by 100%. So that's the true math behind getting your returns back. And I think a lot of people know that. But for any new investors, let's say you have a position of $100 and it drops 50%. It is now worth $50. If it goes up 50%, which is half of 50, that's only 25. So it'll only go up back to $75. So you need 100% returns to get back to what you invested originally. And so it's a longer road when it comes to trying to regain your losses, when it comes to positions, especially value positions that you may not see a return right away. And yes, someone's going to say, but that's why I just dollar cost average in. Yes, I love dollar cost averaging, but there is a point where you need to slow down on the dollar cost averaging. And because, I'm going to give you the reason why, is because eventually when you get into a position that maybe doesn't pay a dividend, because I do dollar cost averaging all day, every day when it comes to dividend stocks. I'm not dividend drunk. I'm not obsessed with dividends like it's my end all be all way of investing. It's just one way that gives me a piece of having return on my investment. But when it comes to value stocks or growth stocks, I think a lot of people can underestimate the amount of difficulty it can be to pick a good stock and figure out where it's going to go and do the research of a company. And I just want to talk about that because if you're dollar cost averaging into a company that you truly believe in and it's down like 50% or down 60% and you keep on dollar cost averaging, eventually this is where the whole big picture of diversification comes in, where concentrated risk happens and we get like tunnel vision. If you're buying into a company, eventually that position gets so big, it takes up like more than half of your portfolio. And it's like, how do you get out of it? You feel like you're chained to this. There's emotion involved, which I'm sure everybody has emotion involved when they're buying a position. But it just creates this difficult challenge where if you need to step away from that position and you need to cut your losses or you want to do that, it just makes it even that much harder to do that. And so if you're one of those people that are like, oh, I'm just going to dollar cost average in, I'm respect, but I hope you believe in the company 5, 10, 20 years out from now, and it's not going to come back in 6 months to a year. You really want to be able to hold that position out 2, 5, 10 years into the future just to really see how it pans out. And so I'm doing a lot of reflecting. I'm looking at my positions. I'm looking at my portfolio. Am I going to be cutting some positions? Am I going to be cutting ties with certain companies? My answer is no. And the specific one that I'm talking about is a company that just recently went public last year, and it's in another portfolio, but that company is Coupang, and Coupang is a company in South Korea that is the Amazon of South Korea, and they have a video subscription. They deliver groceries. They kind of do it all. And they do it in a environmental friendly manner with their packaging. And so when it comes to that, and also I do believe now they are the third largest employer behind Samsung in South Korea. And so that's the company I'm talking about. I'm down like 50% in that company. However, nothing has really changed when I looked at the fundamentals, when I looked at their last earnings. They are still heading in the right direction. They are still doing their thing and expanding side of the world. Taiwan, Japan, Singapore, they are expanding, and they haven't changed their plan at all when it came to when the stock price dropped and so on and so forth. So that's kind of my example. That's the company I'm specifically talking about. But I've lost over 50%, but less than 60, and it does hurt. But my position is just getting so large that I've actually kind of slowed down my purchasing frequency in that company. And the reason I'm doing that is because I don't want to have concentration risk in my portfolio. Now it's pretty diversified in my other portfolio. I'm not talking about this one, but I just want to give it out as an example because I know there's people that only do growth stocks or value stocks. And these are the things you want to look out for. You want to look at the math. You want to be really careful because you get on a really slippery slope when you get just like really growth hungry when it comes to seeing what the stock can do. A great example is company Square, or aka known now as Block. They had a great earnings report recently. However, their stock fell like 4%, and they beat their earnings. PayPal, for instance, missed their earnings and dropped like 2%. Of course, in dollar value, that is a different value, but just as an example, so you have an understanding of that stock price really doesn't really say much, and you really want to look at fundamentals of a company and what they're doing and how they're expanding and really what's going on in the big picture, in the big scheme of things when it comes to business. That's kind of my take on it. And after looking at that position, I just went out and I think for those that, and now I'm just going to speak to a different crowd, those people that understand that they are feeling the cost of inflation happening. I felt that today, and I felt it hard. Like I was filling up my gas tank, and I filled at a certain gas place to get like a discount because I use like a point system thing, and I still felt it. This was the first time this year that, and I don't use regular gas, just so you know, I use premium, which is like 20 cents more in certain areas than regular gas. I almost broke that $100 mark when it came to filling up the tank. and it just like hit me. Inflation is here, and it's legit, like too legit to quit now. And for those that are feeling inflation, those that are feeling like their dollar isn't getting them any further than it did last year, even though they got a raise, I think this is what I'm doing is I'm going to be revisiting my finances, going through the numbers, figuring out, okay, where is the spending happening? Maybe where can I cut down? Because in the past few years, you spend because you could, because it just felt normal. But now it's really starting to affect me in a way where it's like, it really is like a thought in my brain that really doesn't need to be there, as long as I figure out a system and figure out where I need to allocate my dollars. Just like how a company would if profits were down maybe in a quarter and they need to reallocate, or they just need to survive, so that they can thrive in the future. And so they'll reallocate dollars. They'll cut back on a few things, cut back on spending, and growth kind of slows down, which is totally fine. But that's what I'm doing right now in times like this. But for those that have long-term positions or short-term positions, really think about if you need to cut ties with that company, if you truly believe that it'll pan out in the next 5, 10, 20 years, that it'll come back, because we are in a time that's kind of uncertain. I don't know where these positions will be in 2, 5, 10 years. I really don't. I don't know. I don't have a crystal ball, and no one ever will. But just really think about that. Go through your portfolio, figure out, are some of these positions something that I truly believe in, or was it just something that was a little bit of hype and I can let go of, and I really have no complete interest in it? Really ask yourself those questions to figure out if you're going to hold the position, if you're going to sell the position, cut your losses, and reallocate your dollars somewhere else where you can have not such a heavy loss, but have you take a little bit less risk at this time. And of course, people are going to be saying, if you don't take risk, you're not going to get reward. Yeah, I get it, but just stick with me on this one. Be very careful. Really look at where you're sending your money. Really look at where you're allocating your capital, and look at which areas can you grow and which areas can you kind of cut back on, and help boost the growth in other areas. So hopefully you guys did enjoy the video, and hopefully you have a great week. And we'll see you on Friday when we give you the updates on the portfolio when we buy positions. So bye.